Hey traders, John Howell here. In today's video, I'm going to share with you 3 powerful chart reading strategies you can start to apply into trading today, right now. I'm going to walk you through absolute detail. This is a full complete training, as you can see how long this training has gone for. Part 1, the very first part 1 of this training, I'm going to walk you through my #1 chart reading and trading technique. So no matter what market or cryptos, silver, gold, metals, miners, stocks, or even commodities, doesn't matter what market you use, you can start to use these trading techniques and chart reading techniques to apply and use it and benefit your trading today. You can start to use it right now. I'm going to walk, this is a full, complete, in-depth training. And then part number 2 of this training, you're going to learn my powerful reversal method. These techniques actually happen at tops and bottoms of the market. So if you think the market's going to crash or you think the market's going to boom, especially with the stock market where it is right now, if you think the market's going to, if the stock market's going to crash, then we'll start to see this part number 2 in this training. We're likely to see that right now. If you remember, actually recently, as I'm doing this recording, recently the crypto, what happened with Bitcoin, right? Bitcoin did what? It actually boomed and then it bust. It crashed 50%. And that part number 2, that actually happened at the top of the market. And I was telling all my private clients, listen, get out now. If you're in we're about to crash, and we've crashed 50% so far. As I'm doing this recording anyway, I don't know where it is right now if you're watching this later on. And part number 3, you're gonna absolutely love this. This is an advanced chart reading and trading technique. This is part number 3. This is so powerful that when you start to see this advanced trading technique and pattern on the charts, it can produce such really big moves because we're combining a couple of different time frames together. Oh, it's advanced, but you're gonna absolutely love that. So anyway, guys, let's get straight into it. Let's get straight into part number 1 right now. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, so let's actually talk about this most powerful trading technique that I use, and it's been something that's made a massive difference to my trading and the success in my trading. And one of the biggest things for us, right? We want to be able to do whatever we can to stack the odds on our side even more, right? So to have a really good win-loss ratio, but we also want to have the probability of, when we do have successful trades, we want to try to maximize our profits and also cut our losses short. So this #1 thing that I use on every single time I'm getting involved in markets is simple, basic, but powerful, what I call trend analysis in the markets. And it surprises me so much after all this time, my trading, and also doing coaching as well too, how many people know this or maybe not understand it, but they may even understand it, but they simply just disregard it and completely focus on all this other stuff out there, which is all these indicators and the commitment to traders report and the fundamentals and the inflation data and all this sort of stuff. But as a trader, right, as a trader in the markets, the #1 thing that we must understand is reading the markets itself. And from just doing this one thing, it helps you stay on top of the market of, okay, then are we still in a bull market? Are we in a bear market? Who are the buyers in control? Are we still in an upward trend? Or maybe no one's in control, it's just going sideways. Or maybe there's a bear market likely to start. And so this is one of the major things that has helped me do so well from trading, and what's helped me be so successful out of trading is simple, basic, but simple trend analysis. So let's actually walk through this here. In a bull market, what you will see on the charts, and we'll go to the live chart in just a minute. But in the bull market, what we tend to see is the market rally up. So it might do something like this, like that, and then we'll get a pullback. And then we'll get a rally up like that. And then we might get a bit of a pullback like this here. And then we'll rally back up again. And as you can see, the market is making higher lows and higher highs. But the most important part to this upward trend is the higher low. As long as the market keeps making these like that, like that, as long as the market keeps making higher lows, then the bull trend, the bull market is still intact. Now, one thing that a lot of people get wrong is they focus too much on this. Just because we have these pullbacks in the market, and pullbacks in the markets, just because we're getting a pullback in the market, they think, oh, the trend's over, the sellers are now in control, and now we're going to crash and we're going to go down and it's all over. That is the wrong thing to do, because what happens a lot of the times is, as you can see, the market makes a higher low, we rally up, we just get a pullback, and that's the way the markets work. So if we're in a bull market and we get a pullback, there's a high probability, probably 80% of the time, the market's going to continue that trend. That's why most people who call the top, and I'm not going to put names here, they're wrong, 98% of the time. Why? Because as long as the market keeps making these higher lows and higher lows, the market is in an upward trend and the bull market is continuing. It's not until we actually start to not make higher lows that's when we can start to see a potential reversal. So make sure you watch out. I think it's not tomorrow, but the next day, I'm going to talk about the powerful reversal method, and I'm going to talk to you about how to identify tops and bottoms in the market. So keep an eye out for that. So this is a bull market, and this is where most people go wrong. So in a downward market, in a downward phase, we generally get this here, right? Down, and we get a pullback, we get a lower high, down, pullback, lower high, down, pullback, lower highs. And so, as you can see, the market is making lower highs and lower lows in the market. But the most important part to this trend is, as long as the market makes lower highs, the sellers keep knocking it down, knocking it down, knocking it down. As well as the upward trend, you can see in an upward trend, as long as we're making higher lows, that's the most important part to an upward trend. In a downward trend, the most important part is a lower high. Let's do this here. Is a lower high and a lower high and a lower high. As long as the market keeps making lower highs, then now we're in a downward trend and the sellers are in control overall. And now on the flip side, one of the biggest mistakes that most traders make is they focus on these pullbacks through here. Here's the market pulling back against the downward trend, a bit of a pullback against the downward trend, a bit of a pullback against the downward trend. And they focus so much on the pullbacks, but they're not looking at the bigger picture enough to see, oh, look, the market is pulling back, but look what happened. We dropped down. Now we're having a pullback. And this pullback here, this may even last 2 to 4 weeks, as the market slowly pulls back. But the overall underlying trend is knocking it down, knocking it down, knocking it down. And the market is going in a downward trend. And it's so surprising that most people don't focus on this enough, because it's the one thing to help you identify good entry points, but also to help you identify, just because we are rallying right now, there's probably a really good chance that the sellers are going to come back in and go for another, what I call another drop, right? So you can see here, market comes back down and then drops back down, rallies back down, and we drop back down, and then we drop back down. And so here is the basic simple analysis of this move. As I said before, let's quickly recap here, and then we'll go over to the actual live charts, and then we'll actually use this as an example here. But in an upward trend, we have higher highs and higher lows. But the most important part is a higher low. As long as the market's making higher lows, then the market is in an upward trend, and the bulls, it's in a bull trend. The bulls, it's an upward trend. The buyers are now in control because they're just stair-stepping it up. In a downward trend, the most important part to you as a trader is making lower highs, and lower highs, which is a downward trend in the market. So let's actually go to the live market, to the live charts right now, and then I'll share with you exactly. We'll identify this in the live market so you can actually see it as well too. Now, what we're looking at right now is simply a chart. Now, it doesn't matter whether it's a weekly chart or daily charts or an hourly chart. You use the same formation and the same analysis. Now, there's a few things here really, really important. The reason why I wanted to use this chart as an example, that's really important to understand when identifying these highs and lows. So we're looking at this particular chart here, and we can see, notice how on this particular chart here, notice how if I draw the trend, notice how we have like a little higher low here and a little higher low and a little high. See these little higher lows all through here? Well, that's what I call little or non-significant higher lows. Notice how we have these big swings up, big swings down, big swings up, and then the market goes up, 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 up. Notice how we have these much more major swings. That's what I call the major highs and lows, and they're the ones we want to be focusing on, not when the market does this, but when the market does this and like that, we would say that was the low, and then that was the last significant low. So that's the one I'm going to be calculating as I'm identifying the simple trend analysis in these markets. Make sense? So let's have a look at this here. So it's not these lows. So if I'm going to be drawing the highs and lows in this particular market here, and so if I'm going to be drawing that, this is how I would identify it. I'll be drawing from the low to the major high, to the major low, the major high, major low. As you can see, right, that was we had these small little highs and lows, but we didn't really count. This major low here, big swing up, we had a swing down, we came down, we made a big swing up, big swing down, big swing up, and now look what's happening right now. Even on this particular chart here, we're swinging up. So if we have a look at this particular chart here, we're noticing that now this is a daily chart of a particular stock, and it doesn't matter if it's a forex market or crypto market, they all operate the same way, right? There's the same humans and same machines pushing across all different markets out there. But look what's happening here. We had this low, and then we have a higher low. The market pulls back. Look here, we create a significant higher low. Now it's very, very close to making a double bottom, but it didn't. It made a higher low. Remember, in an upward trend, the most important part is a higher low. And then we have a higher low, and then we have a higher low, and then we have a higher low as well too. So as you can see, throughout this point in time, all through here, the market was making highs and higher lows. So the buyers continued, and still to this day are in control. They have never lost control in the market. So if I take everything off the screen, as I was saying before, one of the big mistakes that a lot of people do is I'm zooming in right now, is they do that, right? They're zooming in, and they may only look at the last sort of this. Once again, this is a daily chart. They may look at the last sort of maybe week or 2 weeks, and they sort of get worried. So they may only focus on, if you're zoomed in too much, like here, then on this period, on this downward phase through here, you're like, oh my goodness, the top's in, the market's crashing, oh my goodness. And then the market rallies back up, and then, oh my goodness, the market's getting smashed. But one of the most important parts to a trend analysis is seeing it from the overall picture. This is too close. If we take everything off the screen and we zoom out a bit to get a lot more data, which one is it, data or data? I don't know, right? And we squeeze it up like this, look what we can see here on this particular chart. We can see that once again, the market has continued low, higher low, and these pullbacks here are just simply a nice, healthy pullbacks in a nice, big bull market. And the buyers have continued to stay in control, because even though we get these pullbacks, the buyers have been in control ever since. All right, so let's have a look at now from a bearish perspective, looking at a bearish trend and the most important parts to identifying in a bearish market. Now I've used this one as the example because it's a lot more messier, but it's, again, I'll be able to share with you exactly how to see it. So initially, what did we have back here? We had what? We actually had a very nice upward trend, didn't we? You can see how we actually were starting through here. We actually ran up, and we came back down, and we ran up. So notice how the buyers were in control here, right? Higher lows, and the market ran up, and then the market came back down. But notice how we ran down, and then we ran back up. Notice how we had a higher low and a higher low, right? So same for the bullish trend, highs and lows. But look what happened here. Look where the market changed. It rallied down, and notice how we're now breaking this low. So we're no longer making higher lows. Higher low, higher low. What is this? This is now what? A lower low, but also we created what? A lower high. So notice how the trend has started to change here. This is where the overall trend changed. And again, in not tomorrow's video, but the video after that, the trading after that, I'm going to really help you when it comes to reversal points. And there's a bit of a hint there. and I'll walk you through more of that in a couple of days from now. But as you can see, right now we actually dropped, and now we're in what? A downward phase, and then the market rallies back up, and then we rip. And then we rally back up to create a double top. We didn't break a low, and then we ripped down again. And then we rallied back up again, and then we ripped down again, and now we rallied back up again. So as you can see, just by looking at this particular market, and again, I wanted to use this because you can see it from a bullish trend, and then now into a bearish trend. As I'm looking at this chart, we can see we had a low, lower high, a double top. We didn't break the low, we didn't break the high. So therefore, the sellers are still in control, but they're holding on here. Then it drops back down, rallies back up. Look at this here, lower high, rally down, and then away we go. So as looking at this particular chart, you can see how we went from a nice bullish trend, and then now we went down through a bearish trend. And this is actually just watching the market to see, okay, who's in control. We've got bulls, we've got bears, and focusing on that. And going through this here is one of the most important things, because if we can see the markets in a bullish trend, as an example, and we are getting a pullback, well, then we know in the back of our mind, there's a really good chance that the buyers are going to kick back in again to continue the upward trend. Same here, right? We had the market coming down. So we had the market rallying down, rally back up, rally down, rally back up, rally down, rally back up. So as you're getting these pullbacks, you could be keeping in mind, like, hang on a minute, yes, we are getting a 2 to 4 week sort of rally, short-term rally here, but the market's still in this overall downward trend, and just by looking at the charts. So the last thing I want to, again, I hope you enjoyed this here. Make sure you watch this video a few times if you have to. But the last thing I really want to sort of help you with is take everything off the screen. You don't look at your indicators, the volume. You want to remove, most people have grid lines. Notice how people have grid lines like this, and they have we have grid lines like this through here, like that. Right, we have all these grids, and then you have the code right here. Notice how it looks really, really messy. If I take everything off the screen again here, look what's going on. I have noticed how that I've actually made the chart very, very clear. So I've taken the horizontal and the vertical grid lines off. I've taken the code off this here, and I've just have the open, highlight, close, or it could be candlesticks. It doesn't really matter, but just make sure that they're black, because we don't want red and green here. We just want to focus on what? We want to focus on the trend, who's in control, and we want to focus on, okay, this is what the market is doing through here, and we want to make sure we're focusing on what? The major highs and lows in the markets, because it's the major highs and lows in the markets, not these short-term rips and drops and rips and so on and so forth that are important. It's the the overall flow, which is lows and highs, and are we in an upward trend? Or are we in a downward trend? Or sometimes we can simply go through a sideways phase. And here is a great example of what we call a sideways phase, where there's no one in control. We're not in a bull market, which is making high lows breaking past previous highs, which is this, highs and lows breaking past previous highs. Or we're not making downward phase, a lower low breaking past previous lows. We're not doing that. So in this case, in this example, there's no one in control. Yes, we did have a movement up through here, and then you can see we had this movement through here. We went sideways, but it really rallied up from there to there. You can see how we had a bit of a pullback here, a rallied up, then we had a pullback, which is a double bottom. Now look what happened here. Notice how we had a double bottom, but we just started doing what? We just started going sideways. Notice how when we're not really doing much through here, right? Remember, we need a high and low breaking past previous highs for the bull trend. We need lower lows breaking past previous lows, breaking past previous highs, breaking past previous lows. Notice how we had a double bottom, but then we didn't break past previous highs. Now we had a double top, but then we made a higher low, but then we made a lower high. Notice how it's getting confusing here, right? It's like, oh, this is now where there's no one in control. This here is the worst time to be trading the markets. Why? Because there's no probability that the trend is going to go up. There's no probability of the market going down. We're just stuck in a sideways phase. And a lot of traders make this big, massive mistake of trading this thinking that they know the market's going to break out instead of waiting for the market to break out. And so for example, over here, the market breaks out, then we have a bit of a pullback, and then we go for a breakout again. We want to see something like this, and then a pullback like this for the trend to start, for us to jump on the trend. If you're getting in this here, there's a really good probability that most of the time you're going to get chewed up, because it's probably not going to go up a lot or down a lot. You're probably going to get stuck sideways, and you're going to get stuck just being frustrated. Always wait for the market to tell you, okay, now we're starting an upward trend. Now we're starting that, all right? So in this case example, if we did have a sideways market like this, we want to either look for a nice little higher high, higher low, breaking past previous highs, which is now what? Starting a new bull trend out of this sideways phase. Or we want to see the breaking down and then make a lower high, breaking past previous lows, which is now starting a downward phase. This is the best time to be jumping in, because the market is now starting a new phase, and it's massive high probability that now we're starting, in this case example right here, we're starting a bull trend, or a nice bullish move. Now there's a probability the market's going to go up. Or we're starting a bear trend, or the bear is in control, bearish, which means sellers in control, and now there's a probability the market's going to go down. Make sense, guys? So I really hope you enjoyed today's free training. When it comes to that, make sure you watch this video a few times if you have to, because we did go through a lot. But guys, I promise you, most people out there are complicating this way too much. Mastering this one thing is literally 80% of your success in the markets when it comes to understanding. If we can just wait for someone to be clearly in control, nice clears, highs and lows, upward trends, downward trends, and so on and so forth, then we have a much, much, much higher probability of jumping on a really good. Alrighty, so I hope you enjoyed part number 1 of this training. We're about to get into part number 2, and that's the power reversal method. I'm so excited to share this with you. Now, if you've been enjoying this free training and you'd like to get more training based on what you're learning right now, I'm actually giving away a full complete. You like this free training right now? How would you like to get access to a full complete trading course? And that's what I'm doing right now. I'm actually giving away a full complete whole blown trading course, foundations, mindset, my trading systems, everything. If you go to johnsfreegift.com, or there might be a link in the description, go do that. Make sure you subscribe to the channel as well too, because I do market updates and all that sort of stuff as well too. And if you enjoyed this free training, then go to johnsfreegift.com. But anyway, let's actually get into part number 2, the power reversal method. Let's get straight into that right now. So let's get straight into the training now. What I want to walk you through is obviously a bit more of just a diagram. I'm going to walk you through here, and then I'm going to actually bring up a real chart. I'm going to show you exactly how this works in the live market, so you can see what's going on. Now, every single video would have been building on each other, right? So video 1 was the biggest mistakes. Then video 2 was the trend analysis, which is the most powerful chart reading or trading technique. Yesterday was using trend analysis again. And today is also using trend analysis. That's the reason why you understanding this sort of highs and lows is the most important thing. Again, if you watch these videos, you understand what I'm saying through there. But let's actually recap some of the videos that we've actually talked about here, because it all ties into the power reversal method. In an upward trend, what do we have? We have higher highs and higher lows breaking past previous highs. Higher lows breaking past previous highs. Higher lows breaking past previous highs. Make sense? So every single high is making higher lows. So in an upward trend, the most important part to an upward trend is a higher low. As long as the market's making higher lows, then we are still in an upward trend. Now, what do we have in a downward trend? We have what? We have lower lows, lower highs breaking past previous lows. Then we have a lower high breaking past previous lows. Lower high breaking past previous lows. So as you can see, in a downward trend, what do we have here? We have low. The most important part to a downward trend is having a lower high and then breaking of the low. Lower high, breaking of the low. Lower high, breaking of the low, because that means now we're in a downward trend. So the power reversal method basically puts these two together. So from there to there, if I just drew something like this, actually, you know what? Let's actually do this here. Let's just say, for example, the market went up like that, and we had something like that going, right? And then the market did something like this. Now, let's have a look at this here, right? So you can see how we went from a bull trend, the market's higher lows, and then the market rallied up, went sideways for a bit, and then dropped back down. Where did it drop down to? Let's have a look at this here. So let's actually bring up, you know what? Let's bring up this one here. It dropped where? So there, right? So is that a higher low? It's not, is it? So we went from higher lows, it rallied up, it came back down, and then guess what? It did what? It actually broke the low. So that means the buyers are no longer in control. Now, this is now a warning to say the sellers may be coming in control, where we went from an uptrend, now we may be going to a downtrend, and this may be the big top pattern before we start a big move down, and potentially even a sharp move down. So what do we now need? We need what? In a downward trend, we need our lower high, breaking of the low. And so once we got this lower low is now a warning sign to say, hang on a minute, the bull trend is now over, because we're not raising the prices anymore. They're not making higher lows anymore. Then we made a lower low. Now what we need is we need the downward trend, don't we? We need now a lower high and then breaking of the low. So as soon as we make this lower high and then we break this low, that's now confirming we've now gone from an upward trend. Now we're starting a downward trend, at least in this phase at this particular point in time. Makes sense? So what I want to do right now is I actually want to bring up a real chart for you and show you exactly how this looks actually on a real chart, so we can see see exactly how it all works out there. So here we go. This is what we're looking at here. As you can see, it's actually a real chart that you're looking at right now. It's actually a live chart. And what we can see here is what we're looking at here is we're looking at obviously simple trend analysis. So look what happened here. We did what? We ran up, we made a high, we made a higher low, and then we did what? We broke past previous highs. We ran up, made a low, made a high, broke past previous highs. Ran down, made a high, ran up, broke past previous highs. So as you can see, see how we're actually in a very nice big higher low, and higher low. So what the market is an upward trend. So at this point in time, we cannot be guessing or hoping that the top's in. We don't know. We can't pick the exact top. But look what happened here. What happened here? The market dropped down to create what? A lower low. So we went from making higher lows to now making a lower low. Now remember what I said before just then, right? We now have a lower low. This is now giving us a warning sign that the sellers may be coming in and we may be getting ready for a downward phase. But what do we need? We need to see the market rally up to give us a lower high, and then we need a run down through there and then breaking of the low. So as you can see, as soon as the market broke here, that there was now the point where the market's topped out. This is now what we call the power reversal method. You can see market's topped out. At this point in time, you would not want to be long this particular stock or this particular market, whether it's a crypto market or stocks or futures or whatever. You would not want to be long here. This gets a big X marks the spot if you're long here. Why? Because the market is saying, hang on a minute, we have now changed. We went from higher lows to a lower low to a lower high, and now breaking of the low. Sellers are in control, and as you can see, we've just now had a very big strong sell-off overall, and now we're going sideways through here. And again, this is just taken from the live market, and we're probably going to do something like that soon, because now guess what? Who's in control? We went from higher lows to now lower high. There's probably going to be another lower high here soon, and then we're probably going to roll over and do something like that, something like that. See that through there? So this is what we call a power reversal to the downside, where we actually see how it's actually topping out. We can't get the exact high, but as you can see, it was this point through here that we could start to say, hang on a minute, if I'm long this stock or long this market, the market's now changing, and if the market has a very good probability, especially when we started to get this here, it was right there, lower low, lower high. As you can see, that point right there was now the point where the sellers definitely now we started making downward trend. And no wonder we now got a big flush down, and then we're probably going to do something like that soon, because now the trend's gone from up. We've now peter out, and now we're going to the downside. Now let me show you a downtrend to an uptrend example. So the reverse is true, right? So now we're looking at an example of a downtrend to an uptrend here. And let's actually bring this down just a little bit more so we can get a real good look at this here. There we go. And let me just bring this down through to here just a little bit. There we go. All right, there we go. All right, that's a lot better through there. Cool. All right, so again, this is just a real example, a real chart example. But look what's happening here. What do we have here? We had a move down, rallied up. What? We made a lower high and then ripped back down, didn't we? And then another lower high and ripped back down. Another lower high and we ripped back down. So we're in a what? We're in a downward trend. But look what happened here. Look what actually happened here. We then rallied up and did what? We rallied up and we created this high here. This is now a what? A higher high. So we went from lower high, and a lower high to now a higher high. What is that? That's higher high is potentially upward trend. So now this right here, this higher high, we're not making lower highs anymore. So the market may be running out of steam on the downside, and we may be changing trend. We may now be going through what we call the power reversal method from a downtrend to an uptrend. Now in an upward trend, what do we need? We need move up. We need a higher low breaking past previous highs. And as you can see what happened here, we had a pullback. The market paused there. We then rallied up. And as soon as we actually broke that high point, which is right there, look what's happened ever since. Bam, right? The market's continued up. Now it's gone flat. We're probably going to do something like that again soon. Or we may pull back a little bit to get a lower high. But who's in control now? Low, higher low. See how the trend's changed. So if you were short this market coming down, firstly, if you were long here or here and the market's gone down, you now know why, right? Because you're trading against the trend. You're fighting the market. But then suddenly if you were short here and then suddenly you started to see something like this, you're like, hang on a minute. Now the market is completely changed. And now we've gone from a downtrend to an uptrend, which is a lower high, and then we rallied up, made a higher high, higher low, then breaking past previous highs. From this point here, we went from a downtrend now to an uptrend, and as you can see, the whole tune changed. So even if we did get from here in this market, even if we did get a bit of a drop down through here, who's in control? Low, higher low. This is probably going to hold here and probably going to rally back up again like that. Why? Because we now have an overall low, higher low, and there's probably going to be another higher low because the trend has now changed. And if you're hoping or guessing or trying to work on guesswork or trying to hope that this is now the top, if you're short here, this is now the top and the market's definitely going to drop down through here, it's important to be focusing on what the market is telling you and not what we want to do. This is the biggest thing you can learn as a trader. In my last 16 years of trading, the biggest thing for me is to continue to listen to this. If I am short this market through here and I start to see this point through here, I am now trading against the big boys, right? The big boys push this market around, not us, but the big boys. And the big boys are telling us what's going on. And then if the market starts to rip up like this and then start to do that and you're still short, well, then it's not likely to work out. So guys, this is what we call the power reversal method. And it's amazing. And all it comes back down to is just listening and reading the markets all the time. And that's why I really suggest you, if you're looking at the markets, try to have a screen where there's nothing in the background, where there's no lines or no diagrams. Have no code here. As you can see, there's nothing in the background. A blank screen, and just have black bars, because we're trying to do what? We're trying to read the lows. We're trying to see the lows and highs to get a really good gauge on what's going on with this market, so we can see who's in control. Are the sellers in control? Are we in a downward trend? Are we in an upward trend? And so you can see that. So if you are short and the market's an upward trend, well, you know you're now trading against the big boys, and it's probably going to be, you're probably going to have a really high probability of being stopped out. So far we have gone through part number 1. You've seen my number 1 chart reading techniques by using the highs and lows. You also learned part number 2, the powerful reversal method. Make sure you keep an eye on that, because especially with the stock market where it is right now, if you're worried about the market actually completely having a big, 40-50% meltdown, keep an eye out for that pattern at the top as well too. And we're about to get into part number 3, which is advanced trading technique. And just a reminder, guys, if you love this sort of stuff and you want to get more trading just like this, I'm giving away a whole complete trading course absolutely free just to help you guys out. If you go to johnsfreegift.com, or there should be a link in the description, go get that right now. Anyway, guys, let's actually get straight into part number 3, my advanced chart reading and trading technique. So what I want to do initially in today's training is I want to bring up a bit of a whiteboard here, or a bit of a blank screen here. I'm going to walk you through this here, and then I'm going to walk you through how it actually looks on the charts. Now, this is the advanced trading technique, no matter what market you're looking at. And I really learned this from one of my mentors, and using this technique, it helped me take the confusion out of what the market's really doing. Are we topping out? Are we about to go through a crash? Are we not? What's happening right now? And it really helped me just stay relaxed and calm and understanding what the market is doing. And that is always having a look at the higher time frame, no matter what you're trading. So for me personally, I love trading the daily charts. I love entering in on the daily charts. And let me see if I can change that to a different color. So I personally love trading the daily charts. The reason why is because I can get in today. So this is the daily chart. So I like to trade the daily charts because I can get in today and hold for a few days and make a really good income from that. Or I can actually hold for, a matter of a few months, or sometimes even up to 6 months or more, and really capture some really big moves. So I like trading the daily charts. But the daily charts can be quite volatile, right? There's a lot of up and down swings, and there's a lot of highs, a lot of lows, and so on and so forth. So there's a lot of move, and again, following on from yesterday's video, yesterday's trend analysis. So make sure if you haven't seen that, go watch that first, because then this will make more sense if you watch that way, right? Yesterday was simple, basic, but powerful trend analysis, and now we're taking that trend analysis, but to another level. And so on the daily chart, that's what I like to trade with. But it's always important, but it's also important to make sure we keep an eye on the higher time frame. So if we're trading the daily, we've been looking at the weekly charts. This is where it starts to get really, really, really powerful, because sometimes we can get the market where the market might have a bit of a run up, and then we might start to see something like this happen for a while. And this actually could happen for 2 or 3 or even 4 months, and we're getting a bit of a weak pullback, and then we get a bit of a run up through there, and then we might start getting something like this here, like that there, and then we go for a run. And this is what we're seeing on the daily charts. And what happens is that through this period through here, through this pullback through here, and through this pullback through here, people start to get really confused. They're like, oh my goodness, what's going on? I'm not too quite sure, and so on and so forth. So what happens is, let me just bring up a bit of a divider here. So that's what the daily chart looks like. But if we look at the weekly chart, this chart here, the weekly chart will look something like this: a run up, a pullback, a run up, a pullback, a run up. So you can see that the weekly chart is this period through here is that pullback there on the daily chart, right? So the daily charts, because it's a daily chart, we have a bit more volatility. But if we look at the weekly chart, we can see the weekly chart's just pulling back, and we're now, the overall weekly trend is up. So we have a weekly upward trend. So when the weekly trend is up and we get these pullbacks, we're just getting a nice pullback in a very big bull market. So as we're experiencing these pullbacks on the chart, if we have a strong weekly upward trend, then you know the big trend is up, and there's a very high probability that this here and this here is going to be short-lived, and it's just a matter of time before this trend resumes here. So that's actually the basics sort of what we're looking at there. We want to make sure we keep an eye on that higher time frame weekly trend, because in any moment, if we're going through a bit of a sideways phase or a bit of a pullback on the daily charts, but we have a strong weekly trend, there's a very high probability that we are going to start to see some really big strong moves like this, and very big strong moves like this, which goes inside of that on the weekly chart and that on the weekly charts. So anytime we have a very strong weekly trend, either up or down, then what we're looking for is it's okay, we have a very good strong trend, and any pullback we get on the daily charts is as long as the weekly trend hasn't changed, this is just a nice healthy pullback in a bull market. This will take the confusion out, because if you're looking at the daily charts, you're like, oh my goodness, this thing's been going sideways for 2 months, 3 months, 4 months sometimes. It's like, oh my goodness, what's going on here? But if the pullback is just in line with a very strong weekly trend, well, the very strong weekly trend is up, and we're just going through a nice healthy pullback in the markets, and nothing has changed. We're just gone through a bit of what I call a resting phase before the market is likely to continue this weekly trend. So that's a bit of a basics on there. All it is making sure we keep an eye on the weekly trend, that higher time frame, because as the weekly is strong to the upside, any pullback we get, as long as the market's making higher lows on the weekly charts, then any pullback we get on the daily charts is just a short-term pullback. And you can see from this point here, this is one here, and this is obviously, this is the one pullback here. So first pullback here, and as you can see, we may have spent 2 to 4 weeks just pulling back here. If you're just focusing on this period here only, you'd be like, oh, I'm not too quite sure what's going on. But if you're looking at the weekly chart, you're like, oh, look at this here. We're in a very strong upward trend, and the market's just pulling back. So nothing's changed. We're just gone through a pullback. And then the market's likely to continue. So let's actually go to the actual charts itself right now, and let me show you exactly a few examples of what I mean by this, and this will really, really help you out. Alrighty, traders, so let's have a look at this here. This is actually just a real live chart as I'm actually doing the recording right now. And what we have is two different things. So the first chart to the left is the daily charts, and to the right is the weekly charts. Now, on a bit of caveat there, if you're trading, say, a 5-minute chart, well, then you might want to look at the 15-minute chart as the higher time frame. If you're trading the hourly chart, you might want to use the daily chart for the higher time frame. In my case, in my example, I love trading the daily charts. So we have the daily chart to the left, and we have the weekly chart to the right. Make sense? So let's have a look at this here. We can see, let's actually take this off the screen here. If I bring up a little arrow, and if I notice this weekly chart here, in fact, let's actually do this here. Notice on this weekly chart, we've had a very strong movement, right? Especially in the last sort of, this is a weekly chart, so probably the last sort of, maybe 6 months or more. Look what's happened. We've had a move up, and then we've had a pullback. And we've actually been making higher lows all the way up. See that there? All the way up. Higher lows, higher lows, higher lows. Move up, come back down, and another higher low. So this weekly chart is what? Very strong on the upside, isn't it? So let's now revert that back to daily charts and see what I'm talking about here. So let's actually get an arrow here, and I'm going to bring up an arrow just like that. And actually, I've got a few drawings on there. Let me actually bring this up here. All right, so we can see that if I bring up, see this arrow, you can see this arrow here as I move it around. This arrow here, this is arrow here on the weekly chart. As you can see, if I bring it down to here, if I bring it down to here, like that, you can see how that it shows you it's the exact same level. This is the weekly chart to the right and the daily charts. So I'm going to put up an arrow from there, and look what happened. So the market ran up, came back down, found this low, and then rallied up. And then look what happened. It came back down, and then we found a lot of support, didn't we? Look what the weekly chart was doing. What was the weekly chart doing? The weekly chart was what? In an upward trend, right? So we had a move up, and then we had a pullback. But look what was happening here. This is where a lot of traders can get really confused, because the market comes back up, and then we have a pullback, and then we just do this little sideways sort of phase through here. Not really much going on. But that pullback is what? Just that bit there on the weekly chart. But what's the weekly chart doing? It's higher low, higher low, higher low. Oh, look, another higher low. And then the market did what? We actually broke out, and then the market went for another move to the upside. See that there? Then what happened? Then we had this, look at this big pullback through here. So we started to have this pullback all through here. See all that pullback? See, if a lot of people are just focusing on this pullback, like, oh my goodness, and they're freaking out because they're like, oh my goodness. But if you just kept an eye on that weekly chart, you'll know, hang on a minute, we're in a very big, strong upward trend. So this pullback here is what? This pullback right here is just this pullback here on the weekly chart. And as you can see, what was the weekly chart doing? Just having a nice pullback. So if you're just if you're focused on the daily chart, you're like, oh my goodness, I'm not sure what's going on. You're confused. You're worried about this thing just completely falling through the floor. And then you're like, oh my goodness, okay, well the weekly chart's still up. Well, there's a good probability where that's just a nice healthy pullback before we continue up again. And then as you can see that if I bring this up here, you can see how this point through here is just this point through here. And I actually own this stock for this actually one reason. I bought this stock actually down here, right? And so you can see how that since we've actually made this very big upward move, we've just continued, and now look what's happened, right? We actually went through this would be the sideways phase pullback. That was the sideways phase pullback. And then guess what happened? We broke out and then we went for a nice move up. And then that was that move up there. And then we came down. Now we broke out. Now we went for another move up. And now we're going for another move up. Now it doesn't mean that the weekly chart's going to stay like this, right? But in any moment, in any time you have a very big strong upward trend and you're starting to get these pullbacks in the markets like this here, you got to ask yourself, okay then, is this where the market's completely changed? Or is this pullback in a very big strong bull market? And if that's the case, then the market is in a very strong upward trend. And this will help you take the confusion out and keep you relaxed. Because as this market's pulling back here, like it was here, you're like, okay, well, this is just the way the markets work. We're just getting a very nice, healthy pullback in the markets. And that's what's happening through there. So that's actually one stock. Let me bring up another stock here so I can really drive it home. All right, so let's have a look at this here. This is just another stock that that was really focusing on and really keeping an eye on for. And let me just bring this back to this point here, and I really want to bring this point back to here to really demonstrate what I'm talking about here. So as you can see, what do we have here? This is the weekly chart to the right, and remember the daily chart to the left. Now, if I just focus on the daily chart for a minute, notice how we had we had a strong move up through there. And then we actually spent, look at this here, we actually spent over a month going sideways. And then we rallied up, and this is the daily chart, remember? So we actually had 1, 2, 3. This here was almost 4 months. And then the market went for a run. So if you were in this particular market, or you're watching this market, and this market did nothing for 4 months, you'd be like, oh my goodness, this market's not doing nothing. I'm confused. And you're now staying and frustrated or flustered, or you're just not sure what's going on. Then what do you do, right? Remember, this is the daily chart. Remember, that's the reason why we need to always keep an eye on the weekly chart or the higher time frame to say, okay, what's really going on here? And so if I look at this here, if I take everything up the screen again, if I bring this arrow, so this very first arrow right here, as you can see, is this arrow right here on the weekly chart. Now, what was the weekly chart doing when it comes to simple trend analysis? It was going up, right? We had a move up, and then we just had a pullback. So this here was just this bit right here on the weekly charts. So as you can see, we're just pulling back, and as we started to break out again, we just went for another move up. And then it did this move up through here. So, and then if I now bring up another arrow, and I put this arrow right there, as you can see, that arrow right there was just this arrow right here. Now, look at this. If you were just focusing on the daily charts, notice how that the daily charts were just going sideways through here, right? So not really much going on. But what was happening on the weekly charts? We ran up, made this low, which was this point right here. Then we ran up again, and then we just went sideways, didn't we? Went sideways, but what was happening? We had a low, higher low, and look what was happening here, right? We still could be doing what? Making another higher low. And that's exactly what happened. Notice how we did sideways, then we started to break out, which gives us a bit of confirmation that we're now likely to start to see some upward movement. It broke out, and then it just continued doing what? Making these higher lows and higher lows all the way up. So I hope you can see this. You may have to watch this a few times to really sink it in. The whole analysis is that on the weekly chart, it takes a lot of the noise out because it's not a lot of bars. And on the weekly chart, we look something like this, very smooth upward trend, just like we have here. But these periods through here on the daily charts, they can look something like you may have a move up, and then the daily chart could look something like this. And because it's much more volatile, you're like, oh, I'm not too quite sure. But if you're just looking to take the confusion out of the markets, and this is this amazing, amazing, amazing pattern, because it just helps you take the confusion out, where you're just like, okay, yeah, we're getting a pullback through here like this, or we may get a run up and then a pullback like that in the markets. But hang on a minute, no, this overall trend is to the upside, and there's a real good probability this weekly chart's going to kick back in again, and now we're moving up. Now, obviously there is trend changing, right? So we're in a very big bull market in this example, very big bull market in this example. Weekly chart to the right, daily chart to the left, as you can see. And there are times where obviously where the market doesn't continue up, and that's where you need to always keep an eye, always be flexible. But in the moment when you're looking at a market and the market is pulling back against you, in this case, this is a bullish example. All right, this is a bullish case example. Then what you would do is that if the market is doing that, then you know that there's a real good probability that any pullback, just like here on the daily chart, is probably likely to be then bought back in by the big guys and continued with that big weekly trend. Now let me show you an example of the bearish side and what that looks like. Alrighty, so then we're now looking at the flip side of, geez, I went high just then, didn't I? We were now looking at the flip side of the markets, right? So we're looking at, remember, the daily chart to the left, daily chart to the left, weekly chart to the right. And now what do we have on the daily charts? We have a trend down, move up, and then rallied up, made a lower high, rallied down, rallied up, made a lower high, and then we broke down. You see that through there? So that's what the weekly chart was doing. But now let's go, this is arrow number 1, this is arrow number 2, and I'll mark it on there. This is arrow number 1, and this is arrow number 2, so you can see the different ones. But notice what was happening through here as we're focusing on this. So we had a big move down and we had a little rally up. This was the big move down, and then we had some sort of a rally up through here for a couple of weeks, probably even, actually, what was that? That was over a month of a short-term rally. But as this market was rallying through here, as this market was rallying, you would be very, very, very alert, because where is the trend on the weekly chart? It's down, isn't it? And you're like, oh, I don't know about this. I don't know about going long here, because this is very strong weekly trend. And even though the market's having a bit of a pullback, because it is just a pullback in this very big, strong downward trend, there might be a chance that the weekly chart's going to come back in again and we're going to continue this downward move. And that's exactly what happened, right? We actually can see we had a big move down. So this drop down through here was what? That was that point right through there. And then guess what happened? We actually did what? Let's actually see if I can draw a different arrow, a different color now. Let's actually go, let's actually go green here. So then we did what? And then we had a rally, and this rally here was a very, see how it was actually pretty strong rally on this daily charts. So we had, and that was 1, 2, 3, almost 4 months of bit of a double bottom and then a rally to the upside. But what was happening on the weekly charts? That rally there was what? That rally there. Now notice what are we doing? We had a move down, we had a lower high, bring it down, and then we had another rally here. So as you can see, we had another rally here. And then if you were looking at the market around this period through here to try to go long, you'd be like, we're actually still in a downward trend, and there might be a good chance that this weekly chart's going to roll back over again, and then we're going to start to head south. And guess what? That's exactly what happened. And as you can see, the market rolled over, and then we headed south, because what are we doing? We're making a high, lower high, and a lower high. So we're still in a downward trend, aren't we? And then look what happened. That point through there, then we had the drop coming back down through there, and this was also that high, which is number 1 arrow, that high there, which is number 2 arrow. So as you can see, that if you're looking to buy and hold something, but you're not sure what to do, always keep an eye on that weekly chart, because the weekly chart is king. And until this weekly chart starts to really turn around and start to give us some movement, especially on the weekly charts, then buy and hold may not be a good strategy, because if you're trying to buy all through here, and then the market drops, and then the market starts to pick back up, and you try to buy it through here, and then the market drops, and you're wondering, why does this always happen? I'm buying it as the market's going up, but then the market rolls over again. Well, look at the weekly chart, and the weekly charts, hang on a minute, we're in a downward trend, and until this weekly trend changes, then it's like you fighting a stream, right? The stream is the weekly chart, and you got all the stream running down like that. And guess what you're doing? This is all the stream through here. This is this big stream. All the stream, the stream's running down. This is the momentum, right? And then guess what? And then you're trying to jump in and try to swim against the stream. So you're in here and you're like, oh, let me actually try to swim up the stream. How long is that going to take before you get tired? And then bam. And then you get a little bit tired and you get washed away with the stream, right? The stream will definitely take you. So figure out where the stream is overall. And then what you want to do is you want to try to, not fight against that, but go with it. So for me personally, whenever I'm shorting the market, I love seeing this stuff, right? Because we get a move up, and then I'm just saying, you know what, we're going to move up. Well, actually, it's a matter of time before this market rolls over again. Or like in the first few examples, the bullish move where where the trend is already on a very strong upward phase. And we're in a very big, strong upward trend. And then we start to get some of this, remember I said before, like the pullbacks. I know it's just a matter of time before we start to jump in and go for another move up. If you're looking for a probability, that is, or if you're looking to buy and hold some stocks or even just the market, keep an eye on that weekly chart. And if you are getting into positions and you're getting stopped out really, really quickly, then this actually could be one of the biggest keys for you. Because when the stream is strong in one direction, you don't ever want to fight that. So there we have it, traders. I hope you enjoyed. This is a full, complete blown training that I really have put together for you to really help you become a what I call a chart reading master, as well as start to apply this to your own trading. And I promise you, when you start to trade with the trend, which is rule number 1, when you start to see where tops and bottoms are, part number 2, and also when you can start to combine different time frames, part number 3, you can really start to jump on some really good, powerful moves. And this is the reason why I use this in the way that I trade the markets and my trading system and my trading strategies and so much more. So I really hope you've enjoyed this. Guys, make sure you head on down to johnsfreegift.com. Again, I'm just giving away, if you've really enjoyed today's training, then you're going to absolutely love this trading course here. There's like 9 videos long. I think there's something like over 10 hours worth of training as well too. There's the foundations, what goes into good trader. There's more chart reading strategies just like this as well too. Some really awesome bonus. I can't wait to show you that as well too. I'm going to share my top trading system as well too. So if you're interested in learning how I use and what sort of system I use, I'm going to walk you through that. That trading system video there is about 1 hour long. Just teaching you all the details and all steps to the way that I personally trade the markets and my trading system. I'm also going to share with you some amazing what I call X factor. What gives you the X factor? What do the millionaire traders have that most don't have? And how can you get that X factor so you can start to apply it in your life today? I hope you enjoyed today's training, guys. Make sure you hit the subscribe button. Leave a comment below. Let me know which one you like the best out of all these. What to subscribe to the channel. And once again, guys, go get that johnsfreegift.com while it lasts before I actually take it down. So go to johnsfreegift.com, or there should be a link in the description. Go get that right now, guys, and I'll speak to you real soon.